So this is one of my favorite parts of the Brussels event, because this is where we get to recognize the rising stars in public finance and tax research. And this is the third time we've made this award. The goal with this award is to sort of incentivize and recognize innovative research in the field of public finance, particularly stuff that aligns well with the objectives and the interests of the EU Tax Observatory. That's work on tax evasion and avoidance, multinational taxation, wealth taxation, illicit financial flows, and environmental taxation, and particularly research that we think is policy relevant. So this year we invited submissions from those engaging in either PhD level or postdoctoral level work. For those submissions, those candidates had to be nominated by an academic supervisor, either current or former. We received around 20 nominations for the prize, all of which were very high in quality. They were considered by the three of us, the committee, and we judged them according to 4 criteria: that it was original research, it was answering a new question, high scientific quality, whether or not it took an innovative approach, and whether or not it was very policy relevant. So based on these, we were very, very happy to select David Leite, a paper by David Leite, who's currently at the Paris School of Economics, but is heading to the NMBR next year, for his recent paper, The Firm as a Tax Shelter. So in his paper, which David is going to present in just a moment, he links Social Security data and administrative tax records in Portugal to demonstrate that once individuals become the owner-managers of firms, they shift a large proportion of their domestic consumption into the firm itself, thus evading both personal income tax and VAT. Now, this may seem like a niche concern, but what David will show you pretty astonishingly is that this adds up to a sizable loss of tax revenue for countries involved. I'll let him give you the actual numbers because they are jaw-dropping. David's paper is a really incredible combination of innovative data sources, careful investigative detective work, and a really quite impressive wide-ranging policy relevance. And for that reason, his paper stood out amongst a crowded field of really excellent work. And so I'd like to ask David to come up on stage, and we'll give him his award, and I'd like you all to please give him a round of applause. All right, the floor is yours, David.
Thanks a lot, Matt, and thanks to the EU Tax Observatory for organizing this amazing day. And now I will proceed with my presentation. And I was not aware that Matt was going to do such a brilliant summary of my paper. And I knew, but what I knew is that I was going to talk at the end of the day, and everybody was already tired. And please, so I did what we are doing, almost all of us in these days, is to ask to ChatGPT to provide me an image that summarizes my paper. So he gave me this, which is what seems to be like a guy with a tie, owner of a firm, having a meal with friends or family and saying that he's going to charge that meal to the firm. So my paper is about this, private consumption within firms. Maybe if I asked ChatGPT to illustrate this among the top 0.1%, it would be people traveling on their jets, or some of these colorful examples celebrating the birthday at Versailles. But, well, it happens to all of us experiencing someone grabbing the check and saying, I'm going to charge to my firm, but only to some of us. I have examples from this, but just to say that it happens, we could find examples from this everywhere and not only from the regular guy. So my paper is just about this margin of tax evasion that, if we really think about it, allow us to evade almost all of the taxes in our tax system. So if we are able to disguise private consumption as inputs, we are going to inflate firm costs, and we are going to evade part of corporate income tax. Also, business income is not going to be taxed as dividends or salaries, and we are going to evade personal income tax. And maybe we are going to be able to deduct part of the VAT on these expenditures, so we are not also going to pay VAT. So at once, we evade all of the main taxes, regardless of the tax bases, or how large are the tax bases. And we don't need to hire like a very expensive tax accountant to do this, right? We don't need to hire these big consulting companies. Why? Because there is a wide range of goods, of expenditures that lie on the border between what is actually personal consumption and what could be plausibly considered a business expenditure, like sometimes like travels, cars, supermarkets, or even sometimes private jets. But if you think about this, and because it's so easy to do this might have big implications for the scale of tax evasion and even for the way we measure GDP, right? Because if intermediate consumption is overestimated, maybe we are underestimating GDP. So it has a lot of consequences, but it has not been very well studied because mainly we lack data to be able to say something about private consumption within firms. So in this paper, I tried to construct estimates of how much people shift of their private consumption to the firms. And I do this using electronic invoices from an electronic invoicing program in Portugal that basically give a lot of monetary incentives for people to ask the taxpayer number at the moment of the purchase. And this became very popular, said this admin data captures almost 75% of final consumption expenditures. And I also use data from what is mandatory now in almost all countries, which is electronic invoicing data for VAT purposes on firms. Although not all countries have such detailed data, that's true, but at least a lot of VAT listings are now done electronically. And what I do in the paper is to explore this variation in the flexibility to treat some forms of personal consumption as a business expenditure that goes with the transition from becoming an employee, where you don't have much alternatives. It will be hard to justify to put your car or to put even your clothes or more examples that I will give you as a business expenditure. But once you own a business, then you have this flexibility to classify these forms of personal consumption or even a meal with your family and friends in the business. So I'm going to explore this ability to treat this form of consumption as business expenditures that goes with this transition from employee to business owner manager, and I'm going to try to give you empirical estimates of how much people shift to firms of their private consumption. So I just skip the equations and the technicalities, and I have some graphs, so it's going to be a little bit more than the ChatGPT image. But this is the central picture and the central result of the paper, which is once individuals switch from being an employee to become a business owner manager, their private consumption expenditures just drop 20% in a month, okay? And this does not come with any kind of anticipatory effect that could justify, I don't know, precautionary savings or costs of incorporation or whatever. So it just drops 20% in 1 month and continues to drop, and in 12 months, it drops by about 40%, and if you do the average, it's about 36%. So you would need like a very big shock in your life to decrease your consumption expenditures so that this translates an income shock or something like that. But even more interesting is that spouses whose source of income does not change also drop their consumption once the partner becomes owner-manager of a firm. So overall, household expenditure decreases by 30% after individuals become owner. Household expenditures decrease by 30% after individuals become owner-managers of firms. Now, we can always think about ways of rationalizing this without saying that this is consumption through the firm. But what is interesting, it's to observe that it's not all expenditures that are adjusting, right? It's only those that lie on this gray area between private consumption and what could be plausibly considered business expenditures, as retail trade, cars, car repair, and this kind of stuff. But if we look at non-essential healthcare, which is something that would be very hard to justify as a business expenditure, it would be very hard to shift to the firm, we see absolutely no adjustment. And the same with hotels and restaurants. We see big drops, big falls, but when we look at private education, we don't see any effect. If we see at telecommunications, we see some shift, but utilities, we don't see nothing, and so on and so forth, such that actually only those expenditures that lay on the border between private consumption and business consumption adjust, while the others almost do not change when individuals become owner-managers of firms. And you may ask me, what happens to income? Because we want to know what happens to income to see whether these might be responses to income shocks, and the answer is almost nothing. Actual income slightly increases if we add to the taxable income the income that is being retained within firms. So people have slight more income than what they used to be when they were employees, and still we observe these drops in consumption. Now, is this something that we should care or not? Is this something only done by middle, small owners of firms and the big guys? I already anticipated you the answer to this question by presenting the press accounts that I brought you, but this is the statistical proof. Actually, this is spread all over the income distribution, and actually is concentrated on the top because most of the business owner managers concentrate on the top, so this is driven by the top of the income distribution. Now, I've shown you a set of results on the side of personal expenditures, right? But you may ask me, okay, but we want to see what is the reflection of this behavior on the side of business expenditures. What happens with business expenditures if people are actually disguising them and doing private consumption within firms? We have to see something on the side of business expenditures. So it's very hard, right? If you look at the costs of firms, we understand how tax authorities have such a hard time enforcing these taxes, how difficult it is to find tax evasion on consumption through the firm, because if we only look at costs of firms, you can almost justify anything. You can say it's a gift to a client. No, this is a business meeting. Oh no, this was something that I offered. No. So what I tried to do here was using the data on monthly expenditures of firms and try to relate that with consumption motivations of the owners of the firms. Let's see how the firm expenditures, the business expenditures, react to individual consumption motivations of its owners. Now, we know that firms have owners, and owners who control the firms might have non-business interests, right? So let's see how firm expenditures react to the private consumption motivations of its owners. And what I try to do is a very simple exercise, which says, we know that hotels and restaurants really lie on the border between business and pleasure, right? It's one of the most prone items to react to private consumption motivations. And I look at the birthday month of the owner of the firm, and I try to see what happens to the firm expenditures on hotels and restaurants. But because I usually get this justification from accountants and also from firm owners saying, no, but my birthday is a business event. We all celebrate my birthday, join in because we are a big family, and says, okay, let's accept that justification, but also see what happens when on the birthday of the employees. Do they celebrate in the same way? Well, it seems not, because when we look at the firm expenditures at the birthday month of the employees, a randomly selected employee, we don't see that firms spend a lot celebrating the birthdays of the employees. But when we look at the firm expenditures on hotels and restaurants on the birthday month of the owner, and more importantly, the spouse of the owner, we see that it increases 10%, almost 10% in the month of the birthday of the owner of the firm. So it's difficult to not say that they are using the firm for private consumption, and every euro that they are using to celebrate, in this case the birthday, but it could be anything else, is not being taxed. Okay, it's totally free from taxes. So based on this micro-evidence, I use the coefficients from this micro-evidence, and I also still have time, maybe I was going too fast. I try to compute the aggregate implications of this, because we have seen that this is ubiquitous, not only for our own anecdotal evidence, but from the evidence that I presented you here, right? And it's ubiquitous because it's very hard to enforce, because there are a lot of goods and services that lie on the border between business and private consumption. So we have really to account to have an idea of the scale of the tax evasion associated with this margin of tax evasion. So the exercise that I try to do here, it is just to say, imagine that you would have to pay yourself, let's say, in the form of dividends, so that you could attain the same level of consumption that you are currently having. Let's say, for instance, for each euro that you consume through the firm, taking into account these tax rates, you would have to distribute yourself 1.80 euros so that you would consume the same, okay? And the exercise is how much are the tax savings which correspond to the government revenue losses due to consumption through the firm. Of course, you are going to say, okay, but this depends on the tax rates of your specific setting. The tax savings and government revenue loss will going to depend on the tax rates. But these tax rates are actually pretty much aligned with the European average. I mean, 28% on dividends is what we find almost everywhere. So if we take into account the aggregate loss only on dividends, which is, if you act legally, the cheapest way of taking the money out of the firm, and we add the savings on, if we consider only dividends, not wages and not social security contributions on that wages, it's already 0.5 percentage point. If you add also what you might be able to deduct on VAT, it will be 1 percentage point of the GDP on government revenue loss due to consumption through the firm. So what I'm trying to argue in this paper is this is a lot for us to ignore, right? Especially if we take into account the amount of revenue losses from other margins of tax evasion, for instance, cross-border tax evasion by individuals and other forms of tax evasion that the EU Tax has so brilliantly put the figures on the public debate. This is a lot, and it gives a lot of tax advantages to owners of firms that we are currently ignoring. The other exercise that I did is, okay, let's redistribute these tax savings and let's adjust the income of the universe of owners of firms and try to see how it changes inequality. And it basically has a substantial impact on inequality, because if we adjust the distribution, adding back the tax savings, it increases the Gini coefficient by 1 percentage point. It will increase by 0.5 percentage point the top income, the top 1% income. So yeah, so I don't think I have more time, but I hope you enjoy the presentation. Thank you very much. Thank you.